Good afternoon, Wealth Our Way Nation. What is going on? It is your man, Charles Tank Harris, the founder and chief visionary officer of the financial literacy platform, Wealth Our Way, where our motto is wealth is not only for the wealthy. Welcome to episode 28. Roth IRA 101 is continuing. Today, we are talking about conversions. Conversions is a tricky topic, so let's get into that. But first, I want to thank each and every one of you who are here with me live as I stream across the Wealth Our Way Facebook and YouTube pages. I also want to give a special salute and shout out, as always, to the members of Wealth Our Way Nation who watch this program pre-recorded overnight, over the weekend, or wherever they can squeeze 15 minutes of financial literacy in. And last but not least, a heartfelt what's up to the Life 101 platform and the people who listen to this program pre-recorded on the audio. Yo, I got to tell you this because it's live, broadcast. And I just realized this as I was looking at myself in the camera. My shirt's on backwards. Just, let's keep it funky. My shirt is on backwards. This Reebok should be on the back. Don't know how I did that, but it is what it is. What isn't backwards is this knowledge I'm spitting about the Roth IRA this week. The Roth IRA is a tool that, as I started the week by telling you, the most underutilized tool in retirement planning. You got to get your Roth IRA game tight. And I've been talking to you about what an IRA is, how to make your contributions. We talked about withdrawals. We talked about the tax ramifications. Today, we're going to talk about conversions. So conversions are what happens when you have a traditional IRA or a traditional 401k, and you want to roll it over into a Roth so that you can now have an account that will grow with you never being concerned about paying taxes on it. I was reading several articles online trying to figure out the one that would support me best in explaining this information to you. And I decided to go with an article from bankrate.com. Good informational site. I like them. I tell you, I like NerdWallet. I like Bankrate. I like Investopedia. These are sites that I find give you very unbiased information. One day, maybe they'll pay Big Tank for saying that, but right now it's just free of charge. I like the sites. They seem to know what they're doing over there. So we're going to screen share into a Bankrate article, and I'm going to go over conversions because yesterday we talked about the 5-year rule. One of the biggest things about converting your IRA to a Roth IRA or your 401k to a Roth IRA is that whole thing about putting money in and being able to take it out in the first 5 years, your contributions. Not so fast with a conversion. A conversion's treated differently, and we're going to get into that. I also wanted to talk to you guys about the Savers Credit. And like I said, this topic is so expansive that we may have to cover the Savers Credit at the end of the week. But I want to keep in mind that you can get a credit for saving for your retirement if your income doesn't exceed a certain number, and we'll get into that. So with that being said, let's go with the screen share and see how we're looking. This is the Bankrate article. Everything you need to know before converting your IRA. I'm going to go to the article so I can scroll down. And if you guys have any problems, you let Renee know, and she will pull my coat to it. So I want to just start with the first paragraph. And this is not why I chose it, because they agree with me. But as it says, a Roth IRA is the best retirement account around, according to many experts. Your boy Big Tank is an expert. It's just a way for you to not pay taxes in the future. And as you have heard me say on many, many shows, it is really taxes that will be the biggest hurdle for most Americans gaining financial freedom down the road. Expenses and investments, everybody's talking about what you can do for free. Don't pay a broker, don't do this. Expenses are like 1%, 2%, 3% tops. In fact, I can't even see any company still getting away with charging 3%, but that's expenses. Taxes are 20, 25, 30, 50% in some instances. You weigh the difference, and taxes are a lot higher than expenses. And, making mistakes in your investments, not getting in at the right time, that's a big deal too. But I don't think there is a bigger hurdle for most Americans when it comes to their financial future than minimizing and avoiding taxes. So here's what we're going to talk about. How do you convert to a Roth IRA? Well, It's pretty simple to convert to a Roth IRA. The first thing you do is just open a Roth IRA account, and you can open them at a number of places. So I referred clients to Charles Schwab. I refer clients to Vanguard. I refer clients to Fidelity. I also have a relationship with JP Morgan Chase. I trust the people that I work with at JP Morgan Chase. They have two different platforms. They have a self-directed platform, free of charge for you to do your trades. And then they have an advisor-guided platform. So I always tell people, if you want to get professional help with your investments, you need an advisor-guided platform. If you feel as though you like what I promote, which is getting a broad, diversified portfolio of low-cost mutual funds, index funds, and ETFs, you just do it yourself. Because at the end of the day, there are a lot of people on the internet making money trying to convince you that investment is a daily thing that you have to pay attention to. It isn't. Investing money is a set it and forget it type of proposition for the most part. There are some things that deviate from that, and that's why you need a plan. But for the most part, there has never been an investment professional who has outperformed the general stock market index over a longer period of time than 15 years. So ask yourself how long you have until you need your money. When is my retirement date? If it's more than 15 years ago, there is nobody, 15 years from now, there is nobody walking the planet or who has ever walked the planet who can help you outperform the general stock market. So that's why I say self-directed can be the way to go. You open your Roth IRA account, and then you have a couple of choices. Once you open it, you contact the plan administrator, submit the required paperwork. I'm going to go back there because now you have to talk about what you're going to do to convert. So your account's open and you go to convert. Let's talk about how that process works. It's either a transfer. Where are we talking about here? Okay. We're going to talk about how you transfer it. And I don't think the actual article that I have here goes into the detail that I want to go into, but so I'll leave it here because there's an important form that you have to fill out with the IRS. And I want you to know what that form is. It's Form 8606. So let's talk about the converting process. You have a couple of ways to take your traditional IRA and convert it to a Roth IRA. The first thing you can do is you can have your money that is sitting in a traditional IRA actually mailed to you in the form of a check. You have 60 days to take that money and put it into your Roth IRA. If you do not do that in 60 days, you will pay penalty of 10% if you're under the age of 59 and a half, and you will pay taxes regardless of what age you are if you do the conversion and you did not do it within 60 days because it is a non-qualified distribution. We talked about non-qualified distributions yesterday. If you take the money out of your traditional IRA or your traditional 401k and don't put it back in 60 days, you are going to pay taxes. If you're under the age of 59 and a half, you're going to pay a 10% penalty. So that's one way to do it. I don't like that way. The second way is to do a trustee to trustee transfer. Hey, I got an IRA at Charles Schwab. I want to have a Roth IRA at JP Morgan. I call up JP Morgan or I go online, I open up their Roth IRA account, and then I fill out the required paperwork. Sometimes you're going to do it at the new firm and they'll request the money for you. Sometimes the old firm has a form you have to fill out. You fill it out, you give them the account number you want the funds to go to, and they do a trustee to trustee transfer. It's clean, it's simple. You don't have to worry about messing anything up being in the middle. The third way to do it is, let's say you're at Charles Schwab and you have a traditional IRA, but you want a Roth IRA at Charles Schwab, you do an internal transfer. So you say, hey, I'm just changing from traditional to Roth, and it's with the same trustee. So you don't even have to worry about the money leaving the house. It stays in the same house. For those of you who have heard my earlier episodes where I talk about how house, room, furniture. House is the firm that you're working with. Room is the type of account you have. Furniture is the actual investment in the room. So you'd stay at the same house. You would just change rooms. Look at Big Tank dropping the knowledge on y'all. Stay at the same house, change rooms is staying at Schwab and moving from a traditional IRA to a Roth IRA. One of the biggest concerns that you have when you do your conversion is how you are taxed and when you pay those taxes and what funds you pay those taxes from. Let's say you have a $100,000 IRA and you say, you know what? I want to convert it to a Roth because one day I never want to pay taxes. For 95+% of us, the money that is inside that IRA, we got a tax deduction for it, either because it was in a 401k and they put it in the account before our income tax hit, or we did an individual retirement account contribution and we told our accountant and they took it off of our income for the year and we got a deduction. Because of that, all of that money is treated as taxable when we take it out. So if you take the $100,000 and move it to your Roth IRA, that entire $100,000 is added to your income for that year. That is why you should always look at tax planning when you're doing a conversion. There is no law that says you have to convert everything in 1 year. You convert a little bit of your IRAs, or you can convert all of your IRAs. Make sure when you're converting that you don't throw yourself into a higher tax bracket. It's also a great idea to make sure that you have the money to pay your taxes from some source of funds outside of the conversion funds. Because if you have 100,000 and you think your taxes are going to be 20,000 and you keep the 20,000 out of the IRA, you're moving $80,000 over. Well, you're paying the tax with the 20, but you still got $100,000 of taxable income, but you now only have $80,000 growing. It would be better if you paid the 20,000 out of other cash sitting in a bank account. That way your 100,000 is growing and you have a chance to recoup what you lost in taxes. The other thing is this thing called the pro rata rule. The pro rata rule is for my people who do the backdoor Roth IRA, because one of the Roth IRA conversion, the one thing about the backdoor Roth is it's not subject to the same income limitations that a regular Roth IRA is. That's why I'm able to do a Roth IRA every year. Every year I open a traditional IRA, I put $7,000 into it, and then I immediately convert it to a Roth before it's even had time to grow. That way I'm not subject to the income limit that I exceed already, so I can still get a Roth IRA despite how much money I make. Well, the thing about the converting is you have to treat all of your IRAs collectively as a pool of money and pay taxes pro rata. So let's say, for instance, I did what I just explained. I put $7,000 into an IRA and I immediately converted it. But I have another IRA sitting over here that I don't want to convert that has $93,000 in it. So my two IRAs combined are $100,000. The government's going to say that $93,000 IRA that has pre-tax money in it, even though I'm trying to convert just this $7,000 standalone IRA, I can't treat it like it didn't have taxes. I have to pay taxes on 90% of the $70,000. So I got to pay taxes on $6,300, which maybe at 25% would be about $150 in taxes. That's a way to get taxed on money that you didn't get a tax deduction on. So always be careful of that. I know that's a little tricky. If you guys have questions on it, by all means, I will be back tomorrow continuing and wrapping up the conversion conversation and the saver rule conversation and also the 5-year rule conversation. So if I went a little too quick on the pro rata rule, we can jump into that tomorrow. So with all that being said, I think that converting to a Roth IRA is a great idea because I believe taxes are going up. I'd rather pay my tax bill now and not have to deal with it later when I need my money most. You guys want to come back tomorrow? I'd love to have you. We will continue this conversation. It has been a great week. I'm super excited. I'm not going to even turn my shirt around. I'm going to keep it on backwards for the rest of the day just so I can laugh at myself because that's always a good thing to be able to do. With that being said, let me come off the screen share and tell you what I always tell you at the end of every program. Wealth is not only for the wealthy. I will see you guys tomorrow. Take care and have the greatest